learn with joy.
Hi, hello champions. Good morning. This is your CA Trilok. I am doing well. I hope your preparation is also going well. Today in this video, I am going to discuss MTP paper 1, all MCQ questions. Without wasting time, let us start with the first question, which is based on the process costing. Look at the question. Question number 1 of MTP paper 1. Okay, now let us read the question. And before getting into the question, we all know that in process costing, the questions can have stock, and there is a question without stock. If it is without stock, if there is no opening stock, there is no closing stock, directly we can prepare the process account. But if there is, in the presence of stock, opening stock or closing stock or both, in the presence of stock, we need to follow the 4 steps. Step number 1, calculation of equivalent units or statement of equivalent units, cost per equivalent unit, and then apportionment. At last, we can prepare the process account. This question has the stock. This question has the stock. So we need to prepare the statement of equivalent units. And one more thing, instead of giving total cost, instead of giving the total material cost, labor cost, overheads, they given per unit, cost per equivalent unit. Using that, we need to calculate the total cost. Look at the question. First 3 paragraphs are big stories. First 3 paragraphs is the stories. What they mentioned: Arnav Limited manufacture chemical solutions used in paint and other adhesive products. Chemical solutions are produced in different processes. Some of the processes are hazardous in nature, which may result in fire accidents. Fine. At the end of the last month, one fire accident occurred in the factory. The fire destroyed some of the paper files containing records of the process operation for the month. You, being an associate to the chief manager finance, are assigned to prepare the process account for the month during which the fire occurred. From the documents and files, other sources, following information could be retrieved. So, this first 3 paragraphs, no way related for the solution. No way related for the solution. They given the big story. They given the big story. Some fire accident story has been given. No need to consider that. Look at the next paragraph. This paragraph is regarding opening work in progress. Look at here. Opening work in process at beginning of the month was 500 liters, 80% complete for labor and 60% complete for overheads. So what you need to understand is 500 liters is we are getting as the opening stock in the current month. Opening stock in the current month is 500 liters, which is already completed by 80% of labor and 60% of the overheads. Now, what is the balance job? What is the balance work that we need to do? What is the balance work that we need to do? 20% of labor and 40% of overheads. 20% of labor and 40% of overheads. And when it comes to opening work in progress, what is the value? 2,78,000. Value of the opening work in progress is 2,78,000. The 2,78,000 is the cost of last month. Carry forward to the current month. So this is regarding opening WIP. Look at the next paragraph. This is regarding closing work in progress. How many liters are there? 100 liters. What is the percentage of work done? 20% complete for labor and 10% complete for overheads. What about the balance work? That balance work will be done in the next period or in the next month. Clear? Next. This is about loss. This paragraph is about loss. Normal loss is 10% of input fresh. Clearly mentioned, fresh input. See, there are 2 types of inputs possible: opening work in progress and currently introduced. Here they clearly mention fresh input. So we have to consider current period introduction. Okay, now total losses during the month were 800 liters. Normal loss is 10% of fresh input and total loss is 800 liters, partly due to fire damage. Fine. Output transferred to finished goods, 3,400 liters. Output transferred to finished goods is 3,400 liters. Losses have a scrap value of 20 per liter. All raw materials are added. This is regarding scrap income. Fine. All raw materials are added at the commencement of the process. This point makes sense in this question. All raw materials are added at the commencement of the process. What is the meaning of this? Once the process getting started, 100% material will be given as input. 100% material will be given as input at the beginning of the process. If you look at the opening WIP, they given the percentage completion of the labor and percentage completion of the overheads in the last period. Now the point is, how much is the material completion? 100%, because the process started in the last period. Because the process started in the last period, they would have given the input in the last period 100%. When it comes to closing work in progress of 100 liters, what is the raw material? They given the labor and overhead percentage completion, but they didn't mention the material. How much is the material? 100%. Material is 100%, because the process started in the current month, completion in the next month. Whenever the process starts, raw material will be given 100%. Have you understand this adjustment? Okay, next. The cost per equivalent unit is 660 rupees. See, most of the questions we will calculate the cost per equivalent unit, but in this question they given the cost per equivalent unit. Once see, by preparing the statement of equivalent units, we'll get the equivalent units into cost per equivalent unit, we'll get the total cost. It's a reverse calculation. Okay, now cost per equivalent unit is 660 for the month, made up as follows. Raw material 300 rupees, labor 200, overheads is 160. Put together we'll get the 660. Next, the company uses FIFO method. They are using the FIFO method. Generally, we will follow two methods, FIFO and weighted average method. But in this question, they are following the FIFO method, first in, first out method, to value work in progress and finished goods. Have you understand till here? Okay, now simple. Before proceeding further, let us analyze what is the input given and what is the output. We all know that whatever the input that we given, it can result in three forms. What are the three forms? Completed units, uncompleted units, and then loss. Completed units will transfer to next process, uncompleted units will be lying as closing stock, and loss will be accounted according to normal loss and abnormal loss. Look at the question, input, output. When it comes to input, opening stock, how many liters? It is 500 liters, but fresh input is not given in the question. When it comes to output, closing stock 100. How many units completed? 3,400 units completed. Uncompleted is 100 liters. Loss is 800 liters. Put together comes to 4,300. Here also we will take 4,300. So the fresh input is 3,800. Have you understand this? 3,800 is the fresh input. This loss we need to classify to normal loss and abnormal loss. To calculate the normal loss, we need to know the fresh input. We know the fresh input 3,800. So normal loss is 10% on that is 380. Balance is abnormal loss 420. This is the analysis of the liters. Now look at the solution which I written. It's a handwritten solution. Look at here. Statement of equivalent units. This is balancing figure. 3,800 is the balancing figure, and this is 10 at the rate of 10%. I took the same. Okay, using the question with the see, whenever it comes to this case study scenario questions, you better read the question once. And start doing the entire solution. They'll be asking you somewhere in the solution. Okay, first see, in this question we have the stock. In this question we have the opening stock and closing stock. So first we need to calculate the equivalent units. I'm doing the same. If you look at the format input, output, equivalent units, look at the input, output. Just now I discussed. When it comes to input, opening stock 500, introduce 3,800. When it comes to output, please understand they are following FIFO method, first in, first out method. You tell me out of these two, which came first? 500. Out of these two, which came first, 500 or 3,800? 500 came first. So we need to complete 500 first. So opening completed 500. Totally completed is 3,400. Yes, totally completed is 3,400 is there in the question. Out of 3,400, opening completed is 500. Balance 2,900 is introduced and completed. Is balance 2,900. All of you clear? Next, closing stock is 100 liters given in the question. Total loss is 800. Out of that, normal loss is 380. Abnormal loss is 420. Now we need to calculate the equivalent units. While calculating the equivalent units, we need to take the percentage completion. Accordingly, we need to calculate the equivalent units. Look at the question. I am taking material, labor, overhead. When it comes to material percentage, look at here. Material, labor, overhead. Let's go one by one. Opening completed. What they stated in the question, 80% for labor, 60% are overheads complete in the last period, and material is 100% in the last period. In the current period, material is 0 because the total consumption happened in the last period. So material consumption is 0. When it comes to labor, last period 80%, current period 20%. Overheads, last period 60%, current period 40%. Are you understanding? Next, introduced and completed. Introduced and completed means 100% of the job done in the same period. 100% of the work done in the same period. So material 100%, labor 100%, overheads 100%. And then closing stock. Closing stock is here. 100% of material, labor they stated 20%, of overhead they stated 10%. Accordingly, we consider that. Normal loss units will not consider. Equivalent units of normal loss will not be considered as an adjustment for the next step. As an adjustment for the next step, will not consider the normal loss units. Always, whenever you find the normal loss unit, you just put dash. Okay, don't take the normal loss unit. Next, abnormal loss units, nothing has been stated in the question. Please understand the percentage completion of the loss is not stated in the question. So we will assume 100% completed. We will assume 100% completed. Okay, so so the percentage completion of the loss is not stated in the question. So we will be taking it as 100% completed. Are you understanding? So 100% material, 100% labor, 100% overheads. If you make a total, we'll get the equivalent 3000 equivalent units, 3420, 3440, 3530. These are the equivalent units. See, input I given as a working note. How we are getting the input? Total of output minus opening stock will get the input of 3800. Have you understand this? This is the answer number. Okay, fine. So we done with the equivalent units. It's time to calculate. It's time to calculate what is the total cost. See, because normally what happens, they'll give the total cost, material, labor, overheads. We'll calculate the cost per equivalent unit. But in this question, reverse. They had given the per unit, cost per equivalent unit. We need to calculate the total cost. First, look at the material. How to calculate for material? Normally, cost per equivalent unit of material is total cost minus normal loss scrap income divided by total input minus normal loss units. In the presence of loss, this is the formula. Now look at here. I have taken the same formula. Cost per equivalent unit equal to total cost minus normal loss scrap income divided by equivalent units, because this equivalent units is already reduced normal loss. No need to reduce it again. In the denominator, total input minus normal loss units. This normal loss units is not considered here. That means this 3420 is excluding normal loss. Again, don't exclude the normal loss. Here we already excluded the normal loss. Here no need to exclude the normal loss again. Have you understand this? Clear? Next. So I need to calculate total cost. Cost per equivalent 300 rupees. Normal loss scrap income. Here I given the working 380 into 20. 380 units into 20 rupees. 7,600 is the normal loss scrap income, and 3,420 is the equivalent units. We'll get total material cost 10,33,600. 10,33,600. Just I mentioned the answer numbers. Okay. Now labor cost is equivalent units is 3,440, and cost per equivalent unit is 200, so 6,88,000, and here it is 3,530. Cost per equivalent unit is 160, so total comes to 5,64,800. So this is how we calculate the total cost of material, labor, overheads. Now we are doing the apportionment. To what we need to apportion? We need to apportion to the opening completed, introduced and completed, closing stock. We will not apportion any cost to normal loss, abnormal loss. We will not apportion any cost to the normal loss. Normal loss cost will be adjusted against good units. Okay, now look at here. Apportionment. First opening WAP. Material. Here equivalent units are there. 0, 100, 200. 0, 100, 200. 0, 100, 200. So cost per equivalent unit will get the total cost including current month is 52,000. Cost including previous month is 2,78,000. 2,78,000 given in the question. 2,78,000 given in the question. So okay, I taken the 2,78,000, total comes to 3,30,000. That is about opening WAP. Introduced and completed 2,900 units at the rate of 660, 19,14,000. And then total cost transferred to next process. See, what is the how many units we transfer to next process means opening completed, introduced and completed. Both will be transferred to the next process. Both will be transferred to next process. Together comes to 22,44,000. All of you clear about this? Okay, now closing work in progress and evaluating material labor overhead. Here is the equivalent unit. If you look at here, we have the equivalent units. Closing work in material labor overheads. I'm taking the same. Material labor overheads cost per, if you multiply with the cost per equivalent unit, we'll get the total cost. I'm not calculating abnormal loss because based on abnormal loss there is no requirements. If you look at the solution, if you look at the requirements, okay, now let me show that. What I written here is only working notes. Look at the first question. What they're asking: how much quantity of raw material introduced during the month 2008 introduced? I think here is the calculation. You take the working notes. 3,800. Here it is. 3,800. Option D. Option D. Are understanding? Next. Total quantity of normal loss and abnormal loss. Normal loss is 380. Normal loss is 380. Abnormal loss is 420. 380, 420. Option A. Next. Value of raw material added to the process during the month. Value of raw material. Look at here. Here we calculated 10 lakh 33,600. B. 10 lakh 33,600. Value of labor and overheads in closing work in progress. Closing work, here it is. Closing work in progress. Labor is 4,000. Overheads is 1,600. 4,000, 1,600. Option A. Value of output transferred to finished goods. Value of output transferred to finished goods is C here. Total output transferred is 22,44,000. C. Option C. Done with the first question. Have you understand this? Yeah. Look at the second question. This second question is based on the cost sheet. Second question is based on the cost sheet, but they given the unique, like single product company. They given the company which is into the manufacturing of the single product. Here we need to understand crystal clear that what is direct cost and what is indirect cost. Direct cost means which can be traced to the finished goods. The cost whichever can be traced to the finished goods will be considered direct cost. Indirect cost, the cost which cannot be traced, which cannot be identified with the finished good, is called the indirect cost. So what you need to understand, here is based on the business nature, based on the style of business, the direct and indirect apportionment will be always keep changing. Don't fix in the mind like power means it's always indirect, labor means always direct. Don't fix your mind like that. What you need to see, sir, how to classify into direct cost and indirect cost means the cost which can be traced directly to the product is called direct cost. The cost which cannot be directly traced to the product is called as indirect cost. Are you understanding? Look at this question. ML Limited is producing a single product. This makes sense in this question. Single product, and may expand into product diversification in the next 1 or 2 years. As of now, it's a single product company. M Limited is amongst a labor intensive company where majority of the processes are done manually. Employee cost is a major cost element in the total cost of the company. Fine. The company conventionally uses performance parameters, earning per man shift. So, what is the parameter that they are going to consider is earnings per man shift to measure cost paid to an employee for a shift of 8 hours. Fine. And output per man shift. So, here they are not taking hours as the base, they are taking shifts as the base. Man shift as the base. Okay, now. To measure an employee output in a shift of 8 hours. Fine. The chief manager of finance of the company has emailed you few information related to the last month. The email contains the following data related to the last month. Okay, what they given? During the last month, company has produced 234,000 tons of output. The expenditure for the last month are as follows. So totally how many tons produced? 234,000 tons produced. What is the expenditure in relation to that? First one, raw material consumed 50 lakh rupees. Power consumed 13 lakh kilowatts at the rate of 8 per kilowatt. And this one more thing, 2 lakh 34 tons of output expenditure for the last month. See, this is everything in the monthly basis. Okay, now raw material consumed is 50 lakh rupees. Power consumed 13 lakh kilowatts at the rate of 8 per kilowatt to run the machine for production. Whenever it comes to power cost, we'll be taking it as the indirect expenses, production overheads. But In this question, we are going to take the direct expenses. I already told you, based on the nature of production, the classification of direct and indirect will be keep changing. Here, it's a single product manufacturing company. It's a single product manufacturing company. If it is a single product manufacturing company, most of the expenses are direct because expense divided by number of units. Expense divided by number of units, we can calculate per unit. We can calculate the cost per unit. When the multi products produced, then there is a difficulty of absorbing directly. When the multi-product production company, when the company is producing multiple products, then absorption will be difficult. If it is a single product manufacturing company, the cost can be traced directly. Are you understand? Let me take an example. The coaching center is giving the classes for the CA intermediate alone. CA intermediate alone. Then what is the cost per student? Mean directly they can take total cost divided by number of students will get cost per student. But the same coaching center is giving coaching for CA foundation, inter and final. Then if there is a three categories, they cannot take average on average per student because the per student cost will change. The coaching period of the CA intermediate is 9 months. The coaching period of the foundation is only 6 months. The coaching period of the final can be 1 year. Are you understanding? It's a single product, so it will be considered direct expense. We can trace per unit. We can easily calculate per unit. How to calculate? 13,000 kilowatts into 8 divided by 2,34,000. We'll get per unit cost. Then we can trace it directly to the product. So it's a direct expense. Are you understanding? So this is direct material consumed. This is direct expense. Next, diesel consumption. This is also direct expense. 2000 liters into 93 divided by 2,34,000 will get per unit. So it's a direct expense. Wages, salary paid, direct wages. Gratuity and leave encashment paid to the workers. So direct wages. Hiring charges paid for HEMM, heavy earth moving missions. HEMM stands for heavy earth moving missions. High charges paid for heavy earth moving missions 30 lakhs. Heavy earth movings are directly used in the production, so it will also be direct expense. It is also direct expense. Hiring charges, which can be traced to the product. Okay, now higher charges paid for cars will for official purpose. Official purpose. So it's an administration overheads. Next, reimbursement of diesel cost for the cars. That is also administration overheads. The hiring of cars attract GST reverse charge without credit. There is no ITC. If there is a ITC, then we are not going to consider it as cost. There is no ITC. It is also cost. It will also form part of the administration overheads. Maintenance cost paid for weighing bridge, used for weighing of final goods at the time of dispatch. So it's a selling and distribution. AMC cost of CCTV installed at the weighing bridge, used for weighing of final goods at the time of dispatch and factory premises. See, at the weighing bridge, CCTV is 8,000. At the factory premises, 18,000. This will be considered as it is related to production. We can take it as administration overheads. This is for the entire factory premises, not for just production. For the entire factory premises. So that we are taking, sorry, not administration overhead. 18,000 is a production overhead. 18,000 is a production overhead. This 8,000 is a selling and distribution overhead because of the weighing machine. At the weighing machine, they are incurring this cost. So selling and distribution overhead is 8,000. 18,000 is production overhead. That is for the entire factory, not for production alone. Are you understanding? All of you? Okay. Now, T&DA hotel fees paid for sales manager, selling and distribution overheads. The company has 1,800 employees, work for 26 days in a month. So first what we need to do, according to our classification, we need to prepare the cost sheet. Look at here. First I'm taking raw material consumed. 50 lakh rupees. Okay, fine. Raw material consumed 50 lakh rupees. Direct wages and salaries 6,40,000. Gratuity 6 crore 40 lakh. Gratuity 64 lakh 20,000. So these two are the direct wages. Higher charges, direct expense. Power consumed, direct expense. Diesel consumption, direct expense. If you add all these things, you'll be calling the prime cost 7 crore 87 lakh 10,000. Next, AMC cost of CCTV of factory 18,000. Production, this is the production overhead. We'll be calling it as cost of production. Once we get the cost of production, we need to adjust the opening stock of finished goods less closing stock of finished goods. But in this question, those details is not given. Those details is not given. So cost of production is equal to cost of goods sold. That is 7 crore 87 lakh 28,000. Now we need to add the administration overhead general. There are two categories in the administration overhead. Administration overhead related to production, administration overhead general. So production is not given. Related to production, no expenditure is given, so that we are taking general directly. Okay, now administration overhead general. Yes. Fine. So higher charges of car, reimbursement of diesel cost and GST 4,400 together comes to 92,400 is the administration cost. Next, selling and distribution overheads. Selling and distribution overheads. So weighing, bridge maintenance, AMC annual maintenance cost of CCTV, TADA 36,000 together comes to 56,000. Totally cost of sales is 7 crore 88 lakh 76,400. Have you understand this? Next, now number of shifts, because they are calculating earnings per man shift, output per man shift. These are the basis. So we need to calculate number of shifts. How to calculate number of shifts? 1,800 employees are working for 26 days and 8 hours. 8 hours will be one shift. 8 hours will be one shift. So simply I can tell you 1,800 employees into 26 days into 8 hours divided by 8 hours. 46,800 is the number of shifts. 46,800 is the number of shifts. So cost per shift is, cost per shift is, look at here. Sorry, they are asking cost of production per shift. Look at the requirement. Okay, let's answer one by one. Let us answer one by one. So I have explained the cost sheet. Now look at the requirement. What is the amount of prime cost incurred during the month? What is the amount of prime cost? What is the amount of prime cost? This is the prime cost. 7 crore 87 lakh 10,000. 7 crore 87 lakh 10,000. Where is the answer? So D, option D. Next, what is the total and per shift cost of production for last month? Total cost of production per shift. Total cost of production is, look at the cost sheet. Total cost of production is 7 crore 87 lakh 28,000 and per shift is 1,682.22. 1,682.22. Here it is. C. C is the answer. Okay. Now, what is the value of administrative cost incurred in the last month? Administrative overheads. What is the value of administrative? 92,400. Administrative overheads is 92,400. And this PDF and this working entire thing I'm going to convert into PDF, and I'll be attaching below in the description of this video. I'll be attaching in the description of this video. You can download that. Okay. Next, what is the value of selling and distribution overhead cost and total cost of sales? Selling and distribution overheads is 56,000 and total cost of sales is 7 crore 88 lakh 76,400. 7 crore 88 lakh 76,400, 56,000. B. What is the value of earnings per man shift and output per man shift? Please understand, earnings per man shift. They are asking what is the labor earnings per man shift. That is the meaning of that. Look at the question. What they stated here. The company conventionally uses performance parameters earnings per man shift to measure cost paid to employees. Look at this. Earnings per man shift to measure cost paid to employees for a shift of 8 hours. So we need to calculate earnings per man shift in the sense what is the cost per I can call it employee cost per man shift. Cost for the company, earnings for the worker. Employee cost per man shift is the earnings per man shift of the worker. So how to calculate earnings per man shift? See, the total earnings what they made is these two. 6 crore 40 lakhs is the salaries and gratuity is 64 lakh 20,000. Put together comes to 7 crore 4 lakh 20,000. 7 crore 4 lakh 20,000 divided by 46,800 shifts. Per shift it is 1,504.70. 1,504.70 and number of times is 5. So answer is A. Answer is A. So this is the answers. Next, look at question number 3. The wages budget for the last period was based on standard repair time of 30 minutes per unit and standard wage rate is 50 rupees per hour. So they give standard time equal to 30 minutes per unit. Standard rate 50 rupees. The actual data for the last period are as follows. Number of units 30,000 units. labor rate variance 7,500 adverse, labor efficiency variance 0. Please understand, labor efficiency variance is 0. Efficiency, please understand, labor cost variance divided into two, rate and efficiency. When I say rate, we all know that hourly rate in the sense hourly rate variance, efficiency variance in the terms of hours, labor cost is labor hours into labor rate. Labor cost is labor hours into labor rate. We should know how much because of rate and how much because of hours. Rate variance is negative 7,500, whereas efficiency variance is 0. What is the meaning of that? If the efficiency variance is 0, standard hours equal to actual hours. If the efficiency variance is 0, then standard hours equal to actual hours. Are you understanding? Efficiency variance. See, okay, I'll tell you one more way. Efficiency. How to calculate efficiency percentage? Efficiency percentage equal to standard hour divided by actual hour. See, efficiency percentage 100% means variance is 0. I'm expecting 100 and they are also giving the output of 100. So the variance is 0, 100% output. 120% means favorable, 20% extra. 80% means adverse, 20% low. Exactly 100% means no variance. 100% is how much? 1. So efficiency variance is 1, which equals to standard hour divided by actual hour. Therefore, actual hours equal to standard hours. In this question, what they given is only standard time. And we are going to take standard time equal to actual time because the efficiency variance is 0. There is no variance in hours. Standard equal to actual. Whatever the time permitted, within that time they are able to complete. So the variance is 0. So actual hours equal to standard hours. Are you understand? Look at here. Standard hours, 30,000 units into each unit 30 minutes, totally 60 minutes in a hour. Totally 15,000 hours is the standard time. Standard rate given in the question 50. Efficiency variance is 0. Therefore, standard hours equal to actual hours. This point is not mentioned in the institute study material. You need to understand this. Why they are taking standard equal to actual means because the efficiency variance is 0. When the efficiency variance is 0, standard hours equal to actual hours. Okay, next. Labor rate variance, actual hours into standard rate minus actual hours into actual rate. See how to remember these formulas. I am going to make clear-cut video on the standard costing. I'll give you the simple technique. Very simple technique how to remember the formulas. I'll give you one universal formula. The same formula can be applied for all the variances: material, labor, variable overhead, fixed overhead, sales. For all the variances, you can apply the same formula: 1 minus 2, 3 minus 2, 1 minus 3, 4 minus 3, 1 minus 4. The people who attended my classes, they will understand this easily. But don't worry, the people who didn't attend also, I'm going to make the elaborate video on the standard costing. And I'm going to give my own format solutions, which is very easy to present in the examination. Okay, now, as of now, labor rate variance is AH into SR minus AH into AR minus 7,500. Why I'm taking minus? Because it's adverse. Adverse means negative. Minus 7,500 equal to 15,000 hours. Actual hours is 15,000. Standard is also 15,000. 15,000 into 50 minus 15,000 into actual rate. So actual rate is 50.50. 50 rupees 50 paisa. That is the answer for the third question. Look at the fourth question. This fourth question is based on this semi-variable cost. The concept of semi-variable cost. So, what they given here? They given the overheads at 50% capacity and 75% capacity. So, as an example, to understand this better, I took the example total activities 1 lakh units. So, 50% means 50,000 units, 75% means 75,000 units. I took the budgeted overheads 30 lakh, 40 lakh. Overheads is changing. When the overheads is changing, it is not a fixed. When the overheads are changing, it is not a fixed cost because amount is changing. And to make it as variable cost, 30 lakh divided by 50,000. 30 lakh divided by 50,000, you will be getting 50 rupees. 60 rupees. Whereas 40 lakh divided by 75,000, the variable cost it is also not a variable cost because see, the total cost is not same and variable cost per unit is also not same. So it's a semi-variable cost. We all know how to classify the semi-variable cost into variable cost and fixed cost. First we'll calculate variable cost per unit. How to calculate? Changing cost divided by change in units. Changing cost is 10 lakh rupees divided by change in units is 25,000. Per unit is 40 rupees. Total variable cost. I'm taking 50,000 as the base. 50,000 into 40, 20 lakh rupees. Fixed cost equal to total cost minus variable cost. 10 lakh rupees is the fixed cost. Now it's time to calculate total cost of the 60% capacity. 60% capacity means 60,000 units. I am taking 60,000 units into 40 plus 10 lakh rupees, 34 lakh rupees. Are you clear on this? Okay, next. Look at the question number 6. I think question number 5 is there, which is theory based. It is a theory based question. Which of the following statement related to zero based budgeting is false? C is the answer for this. It is probably the least time consuming and least costly approach. See, actually speaking, it is the more time consuming. Zero based budgeting means there is no, see, generally how you budget for the next period, how you budget for the next period based on the current period, based on the current period by taking the deviations will budget the next period. But in this case, there is no base only. Everything you have to assess. You have to look into the production process. You have to look into the production ability. We have to search for the market. We have to analyze the market demand. Everything you need to do. There is no base given for you. Everything you have to analyze and prepare the budget, which is hectic task, and lot of time taking. So, but they given least time, which is absolutely wrong, and least cost, which is absolutely wrong. This is the false statement toward the zero-based budgeting. Okay, look at the question number 6. I know that I'm bit fast. I used to tell the common thing. See, I am going bit fast. There is no doubt in that. I am thinking that you already studied. I'm just facilitating you to complete the portions. By watching this video, what benefits? See, maybe 40 minutes, maybe max to max, the video will be for 40 minutes. What are the benefits that you're going to get? To do the same question, it will take nearly 2 hours for you. To do the same 7 questions, it will take nearly 2 hours for you. But I'm able to complete within 40 minutes, which saves your time. Okay, now look at the question number 6. This is a very simple concept based on the under or over absorption. We all know that how to calculate absorption rate. Budgeted overheads divided by budgeted base quantity. Budgeted overhead divided by budgeted base quantity, you get the budgeted rate. Using budgeted rate only, we are going to absorb the overheads. Okay, using budgeted overheads only, we can absorb the overheads. I already made video, crystal clear video based on this concept. Under or over absorption, you can check in my channel. You can check in my same playlist. Okay, now, so first we calculate the budgeted rate. Then absorbed overheads equal to actual base quantity consumed into budgeted rate. Absorbed overheads equal to actual base quantity consumed into budgeted rate. Absorbed overheads minus actual overheads is the under or over absorption. In this question, they are asking to calculate under or over absorption. Look at here. Actual overheads is 5,20,000. Absorbed overheads is actual machine into budgeted rate. Here I calculate the budgeted rate 30 rupees. So actual machine is 17,040. Actual machine is 17,040 into 30, 5,11,200. Under absorption, see, actually is 5,20,000. Actually cost incurred is 5,20,000. But how much is accounted is 5,11,200. Or absorbed is 5,11,200. How much is under absorption? 8,800. Clear. Next, question number 7. This question is based on the optimum transaction size or optimum run size (ORS), which is similar to the EOQ, economic order quantity. There, EOQ is about purchase of quantity, ORS is about production of quantity. Production quantity. ORS equal to root of 2 AS divided by C. A stands for annual production. S stands for setup cost per setup. C stands for carrying cost per unit per annum. Look at here. 80,000 caps they are producing. 3,500 is the per setup cost, and carrying cost is, in this question they given 1 rupee per month, rupees 1 per month. Please understand, C stands for carrying cost per unit per annum, per annum. Here what they given is per month, so convert into per annum. 1 into 12 rupees. Substitute the values in the formula. What is the formula? Root of 2 AS divided by C. You will be getting 6,832. Actually, in this question, the requirement is optimum run size. But what they given in the options is number of runs. Optimum run size is the requirement, but the option what they give is number of runs. So what you can do, each run can give 6,832 approx. Actually it is 6,831.30, as the approximation we take a 6,832. Each run can give 6,832 to produce 80,000 tons. To produce 80,000 tons, how many runs required means 80,000 divided by 6,832. You will get 11.71 orders or 11.71 orders or 12 orders or 12 runs. Total number of runs required is 12 runs. I think they given number of they given runs only. Look at the point 7. It is in runs. It is number of runs. Number of runs 11.71 runs or 12 runs. This is the answer. Have you understand this? And don't feel bad and keep telling this. Many people are watching my videos, but Many people are not subscribing the videos. Please subscribe to my channel, because it's a very simple thing. The effort what I'm giving, I feel that if you subscribe the channel, I feel that you are liking my videos, and it will be motivate me. It will motivate me to do more videos. And please like the videos, and if possible, whoever in need, please share the videos to them. Okay, so do the preparation well, and whatever the things. See, today also I got the message from one student saying that he want the video based on the question 4A of the model test paper 1, which is based on the marginal costing versus absorption costing. Today I'll do that. I'll do the concept of marginal costing versus absorption costing also. I'm going to complete today, and limiting factor also. Okay, apart from this, if you want any specific concept or any specific question, please let me know through the comment box. Definitely I'll respond to that. Okay, thank you.